Most commercial real estate investors lose money almost every single deal they do, or at least don't maximize the returns because they're too optimistic. My real estate team's done $1.6 billion in transactions over the past few years, and this is what I see from my successful clients and what we do differently than other brokers. We help them with the best deals every single time because we're pessimistic when it comes to the buy side. And after we acquire the deals, obviously afterwards, we're optimistic. We say, okay, cool, our baseline is covered. We have returns we want. But moving forward, let's plan for the gold. And this is what I'm going to break down for you a few of the biggest reasons why I see most agents or most investors get the wrong deals. Number one, they'll buy on hope instead of numbers. You should never do that. I see so many brokers will create pro formas and create spreadsheets and show you all these numbers, but I don't care about projections. I care about what's happening right now on this deal. What is the NOI? What is my cap rate? What is my net free cash flow? Show me the money. You ask the same exact question. You want the money. You want a good asset. And depending on what kind of investor you are, is type 1 or type 2, cash flow or aggressive equity plays, that will make a big role as well. But overall, I'm trying to see what is the deal today and how can I make the numbers work in your case, your favor now. You want more help on all this and get the best deals negotiated for you, sourced for you, so much more. Down below, link in the description, the first comment section, how to call me directly. I can walk you through the best steps, help you save or make more money in your next transaction in commercial real estate in Austin, Texas, or anywhere for that matter across the nation. Because I've seen my clients with $250,000 and more before actually on one single deal, and I want to do the same for you. Now, no obligations. But that's the first thing, though. I want to make sure we are investing on the deal. I think like an operator and an investor first, then a broker. Most brokers are opposite. I want to see what is the bottom line, how much can we save you, what is the overall goal we have for the exit strategy, more on that pretty soon, and really have a good basis on making money today, not just optimistic future visions in the future. That's number one. Number two, kind of the same point, is so many investors and other brokers are too trusting of the pro formas, of the numbers. Like, I don't care if you think this asset you're selling for $10 million, NOI is $1 million. Like, cool. It's a 10% cap rate, but what is the actual number? Show me the T12, show me the bank statements, show me the rent rolls. That is what I want to see more of than anything else. I can care less about your proposed pro forma because it's so easy to inflate NOI. It's so easy to be optimistic. It's so easy to say this is a great deal, but in reality, after doing digging and research, like, well, this is actually kind of trash. Like, for example, I was a few weeks ago. It's like $3 million, nothing big, and they told us the NOI was like $300,000. I think it was like 360. So like, wow, okay, 11% cap rate, day one, cash flowing a lot of money for my client. This sounds amazing. And they sent us over a T6. And well, T6 was kind of off, but like maybe there's room for growth. Okay, like sounds good. It's not totally, irrefutable. Like it still works. Like not what we were looking at, but it still works. Maybe the last 6 months are fantastic. So we did LOI, we wrapped up the deal, and then after a few days of doing due diligence, walking the ground, and so forth, they give us the next T6. We have now a total T12, and the NOI went from a 360 to like a 200 something. It's like, well, this deal is no longer good. And even when I do stabilize it, I'm lucky to get to that price point. Now, like, we obviously canceled that. My client lost no money. Nothing happened. But they promised us a super, super high inflated NOI. And when you look at the numbers, Even with the T12s, it's not all the way there. Like the T12 that they gave us helped. What helped the most was obviously the bank statements and more as well. I want to know exactly what's going on step by step and not make these huge bets on what they're telling us. But at the end of the day, it's easy to lie with numbers. So when you see T1s, T6s, don't use them for face value because obviously if they're saying, hey, the first T6 was being stabilized, the next T6 afterwards is going to be a rock star deal. Like, okay, how rock star is that? Because let's show you, let's say this deal was $3 million or NOI that we got was like 223 divided by 3 million. That means my cap rate is a 7.4%, which is great. Like, above 7, beat inflation, 8 and up. Most of my clients are buying these kind of transactions, 8 and higher. This is a 7.5. We probably could negotiate some more deals off of it. Say, hey, after seeing this, I'm going to buy this for 2.5, for 2.1. Let's see. With 2.5, it's 9%. So if it's a cool NOI, 100K off or 130K off than you told me originally, still going to cash flow, still a good deal on paper, but we really were expecting to see this high, close to 11% cap rate. We declined because we always knows what's wrong with the deal, what's the line about. And of course, a lot of brokers, back on the first point, will invest in transactions on Forma. And I think you should do that to an extent, but it shouldn't be the overall basis on when you move forward. Like I might move forward because I see the transaction will become a 11, 12% cap rate, which they said day one it was that cap, that aside. But I'm gonna buy on today. So right now I'm looking at this deal. After this ask price is a 7%, 3% cap rate. Not bad, not great. I have 8 or 9 or higher. We could do negotiations, but after that happened, trust is pretty much burnt. And what else are they not telling us? So again, be okay with saying no to deals. It's still kind of number 3. Like just because a deal is good on paper, you should not be expecting to see what's happening in terms of what's around there, what's being built, why is it not selling yet. Most deals that are great will be sold off market, or if it's on market within a few days to a few weeks. All these things are questions to ask yourself when investing in commercial real estate at a high level. I want to know what's nearby, what's the traffic, and of course, based on what you're doing from asset classes, multifamily, special purposes, office, retail, all these things makes a difference. So obviously you want to know what is the overall theme of your asset, but those are still massive questions. Are there anchor tenants nearby? What is the DSCR afterwards? What are the projected returns? Are there a declining market or inclining market? I want to know these questions. When you have those bases, it makes it so much easier for you to always have a safe return. But I believe you can never truly fail in real estate if you do these 2 things. 1, if you invest today on a good deal, not in the future, today on a good deal. Number 2, you wait long enough. If you do those 2 things alone, it is pretty much impossible to fail. Now, obviously, things like COVID can happen or a natural disaster can happen. And then obviously, I'm wrong in that case because life happens. But more often than not, 9 times out of 10, if you do those 2 things alone, you just invest on working deals now, non-projections, non-fantasies, non-being optimistic, and you invest on a long time horizon, you pretty much always be safe. And this is also kind of the next point. A lot of people will, 1, maybe do those things, and you can still fail if you don't do this next one, which is overestimating in terms of your CapEx and your OpEx. If you're like, hey, I'm going to spend $200,000 to upgrade everything, when it could have been $100,000, that can kill you there as well because then you're out of pocket more money. So that's how you make sure you're investing for the result and not for the ego or for the glory. Say that one more time. You want to improve and invest for the results and not for the ego or for the glory. Meaning, I'm not going to make this office space super decked out with bill tabs and all these crazy things everywhere and top of the line designs when it could easily be sufficient of having a middle class area of having good amenities and good spaces and so forth for the next person. Like, I'm not burning it for myself, I'm burning it for other people. Now, if you're watching this, you probably know, yeah, of course, why would I do that? I see it happens all the time. I've been to places like, wow, this place is really high end for what it is. Like, look at single family houses. How many homes have you seen that are meant to be a lease property look like it's made for the owner themselves? Maybe they moved out with a linen rent. That could happen too. It was so big. And then on the same point of, living rentings and all those strategies, also, what is the extra strategy you have? A lot of people, the extra strategy is cash flow. And I would honestly say that is good, but for most people, it's probably not the best strategy. Like if you're a family office that some of our clients are, totally 100% makes sense. Like for them, the asset is more of a bank account for them with a park the money someplace in a hard asset that will grow and pay off dividends for them every single month. For most investors, unless you're already making $1, $5, $10, $20 million a year in net free cash flow, you probably want to make more returns quicker than a 30, 40-year time horizon. Meaning, if you wait 5 years or even 10 years to either refinance, to force equities, even a couple of years sometimes, you're like, hey, I'm going to buy this asset that is today at a 13% cap rate or 8% cap rate. I'm going to stabilize it, upgrade it, better management, better operations, do painting, better ads, and then from there, make it a higher cap rate, take it from a C class to a B class, and then resell it about for $1 million. I sell for $2 million 3 years later. Great. That is a massive play. That is an exit strategy. Some extra strategy, but I'm going to buy this property. I'm going to do some OpEx to it. And then in 6 months from now, I'm going to take it from a 100K NOI to 150K NOI, refinance or do a HELOC or some kind of strategy to pull out money and then buy more properties and then have more capital in your bank account. That is kind of the end goal you want to have a lot of times. So what can you do today to have an exit strategy? Now, hopefully you guys don't need this example because, I do think most investors have an exit strategy in place, but you'd be surprised. Another one is that you see all these gurus out there. I won't name names, but you see all the gurus out there who are like, you need no money down. You can do seller financing. You can do a bridge loan. You can do a gated loan and all these other strategies to then wrap up these commercial properties and then use the net proceeds that you make from the property to then fund your life, to fund the business, and to fund anything you need for repairs. That is a disaster waiting to happen. If you have the mindset having no money out of pocket or having no reserves built up for this business, you may have a hard time because life happens. Things break. It's all man-made. And unfortunately, we're not perfect. So what we built is also not perfect as well, meaning that roof may break. The foundation may crack. The tenants may not pay. All of these things can destroy a huge part of the NOI that you already have in place, meaning make less cash flow. Luckily, it's not residential real estate where like one person moves out on a single family house, you're totally out of line, but it still happens. Like if you invest in property and your economic occupancy rate drops from a 80 to a 60 or 40%, you can be break even just from that one thing alone. So I think it's so crucial to have some kind of reserves. Like for me, my investors, my lenders that we use, has a strategy that can do working capital, meaning they will give us back funds in a couple of days after my clients invest in working capital for reserves, for owner draws, or to just buy more properties. It's kind of like reverse equity in a way. And that is the strategy you can do as well for yourself. You want help with that? Down below, link in the description. How to call me and my team, walk through the whole strategy. My Linda is world class at what they do. Help you buy more deals. Like some of his clients are doing like 400 to 500 transactions in like 5 years thanks to that strategy alone. So it works really well. But having reserves, I think, is so crucial, so important. Having that fund kind of in place, 20 to 30% sometimes, more than you think that you need, will help you weather any storm, especially if you're buying these Class C and B properties that have a high cap rate. Like if there's high cap rate, you know there are issues with the property. That's why it's being sold for so cheap or so affordable in that manner. Or you have a really good discount on the ask price, one of the two. More often than not, because the property has terrible CapEx or terrible OpEx. Yeah, fix it, stabilize it, and during stabilization, you know you will lose money during it. Which leads to our last point. I also think most commercial real estate investors lose money because they haven't adopted being a true operator. A lot of people treat investing as if it is the main source of income, which I get, totally understand that, but it's not the case. It is a business, meaning it's to pay you a salary. You should have a reserve salary in the business. Up above, a whole video that breaks down how the rich top 1%, top 0.1% of people divvy up their funds when it comes to the life and the business and community funds and so much more. Help you get a better understanding of that. But I do think that you can really dial down being a master operator, having the funds divvied up correctly, making sure that you're always going to be investing for the long term, improving the property, and having it be like a super effective unit or building or asset, you will never lose. For a quick recap, I know we did that a lot in the past 15 minutes or so. Buy on true numbers, not on hope. That is so important. You invest on what's actually happening today, not just future projections, to make sure you're making money from day one. Make sure you don't trust this pro formas and numbers, even T6s. Not enough. I want to see the full on T12. I want to see bank statements. I want to see rent rolls and tax returns. All these things help me understand, is this actual numbers or is this made up? Don't ignore expenses. Have reserves. Have some kind of exit strategy. And of course, become an operator. Become a true investor that thinks now and long term. Do all those things, you make the most amount of money you can think of, make generational wealth, have legacy, and build your empire. This is helpful for you. Down below, smash that like button, tag your friends, use the sale. Hope you all enjoyed this. I'll see you at the next one. Have the best day yet. I'll see you at the top.